Hello, everyone, and welcome to our podcast at the MIT Center for Real Estate. Robby Mulcahy here.
And Dean Firouzian.
We're both first-year students in the Master of Science in Real Estate Development program here at MIT. On the pod today, we've got two really special guests, Brad Hargreaves and Paul Stanton of Thesis Driven. Thesis Driven is an innovative online platform that dives deep into emerging real estate themes and profiles the operators executing on each. The brand started as a newsletter, publishing long-form essays on specific topics in commercial real estate, specifically with an eye towards highlighting new real estate concepts, technologies, and funding models. Thesis Driven has since expanded to include a podcast, an online and in-person learning platform, and a developer database that inventories hundreds of qualified, active real estate developers and owners. Personally, I think Thesis Driven is publishing some of the best real estate content out there today, and that's truly no exaggeration. It's one of my favorites. I've been reading since late 2023, and I recommend it to anyone and everyone I talk to. Paul, it's great to chat to you again. Brad, it's a pleasure to see you. We're so excited to have you both on the pod today. Thanks for being here with us.
Of course. Excited to be here.
Thanks, guys.
So there's two broad places I'd love to go with this conversation today. The first is your stories, and then the story of Thesis Driven as well and how it all came together. The second is a broader conversation about what you're really excited about in commercial real estate today. I feel like you guys are especially well equipped to give us some really interesting and informative takes about what's new and exciting in the world of investment, capital raising, technology, and policy. So hopefully we'll have time to get into all that. But let's start from the beginning. If you could, walk us through your stories. I'd love to hear from each of you about how you got started in the business, through how you got involved in business together, and then the genesis of Thesis Driven.
I will kick it off. So, guys, thanks again for having us. Can be pretty quick with my background. Really the underlying theme of the last, 20-ish years of my career has been really focused around real estate innovation. I started in a more traditional real estate world. I went to law school because I wanted to be a developer, got into real estate private equity out of law school, which was, adjacent to what I wanted to do, and got the nuts and bolts of kind of real estate investing, but really have been passionate about, some of the more innovative models and structures and, different entrepreneurial opportunities that exist, within kind of the burgeoning real estate market. So I left to start a prop tech company in 2014 called Building Social. And, that was my foray into, some more of the kind of real estate startup world, and got involved in a number of things, throughout going down that path, including, OpCo-PropCo models, launching my own OpCo-PropCo business, and during COVID, started an investment banking boutique that's based here in New York. It's called PTB, which I still run, and primarily raises capital for innovative real estate concepts. So, through that, have spent a ton of time just getting to know all of the emerging models, all of the emerging asset classes. And that's when Brad and I, really came together a few years ago. Brad had started writing about, all of these innovative asset classes. I was working on capitalizing them. So, a natural first step for us was to start writing about, how these deals are getting capitalized, how OpCo-PropCo structures are being capitalized, how you're accessing, different family office capital and other alternative sources of capital for, to grow, emerging models in the space. And then that, kind of evolved into, us launching a course business and some other things that we're really excited about, related to real estate innovation. And I think, where we're both really interested over the next decade is being, a meaningful part of this ecosystem. There's just so much opportunity, as the world changes and as policies change, and as, with AI and technology and everything else, to shift how we think about, the real estate industry. There's just lots of opportunity to be contributing to the ecosystem of, emerging operators and themes and technologies. And that's, I won't speak for Brad, but personally what I'm most excited about with Thesis Driven over the next, decade.
Yep, totally. Quickly share mine. Really starts in the global financial crisis of 2008-09. I graduated college in 2008, and so many of my peers were struggling with finding employment, finding anything interesting to do with their lives. So kind of in that time, a couple of friends and I started a trade school called General Assembly, which taught technology and design skills. that both have became a thing. Over the next 4 years, we became the largest trade school in the U.S. It also got me into real estate in kind of an odd way, which is, we had this kind of brand and product commitment to doing a lot of our training in person. I mean, this was, sort of before the Zoom era, and, the online learning was getting started, but the quality was still pretty poor. Nobody really knew how to do it well yet. And so we really, given that getting people prepared for jobs was just a key part of what we were doing, as we scaled, we would sign these massive leases with office buildings, retail, and turn them into our campuses. And so that got me kind of into the brick and mortar world, and admittedly on the end user side, but I was always kind of fascinated by the business aspect of it. So we built General Assembly, ended up selling it in 2018. It's a good outcome. And around 2015, I spun up a new company called Common, which was focused on solving a lot of the housing challenges that we faced at General Assembly. We were building schools, campuses in the most expensive places in the world. Our headquarters was in, the Flatiron District of Manhattan. We were in San Francisco, DC, LA, on the west side, of course, Boston, Miami, Atlanta, et cetera. And our not just our students, but our instructors and our employees face just these tremendous housing challenges. So we started what was kind of originally like the student housing spin out of General Assembly, that became a multifamily operator in its own right, focused on innovative typologies like co-living, micro apartments, live workspaces, things like that. And that to do that and do that well, I had to get really smart really fast on how the real estate industry works, because there's plenty of demand for that. And there was always plenty of demand for that. If you could deliver a high quality room with a private bathroom, access to a nice shared kitchen and amenities in the right location at the right price, there'd be a ton of demand for it. So it's really about unlocking supply. And that involved convincing the capital markets, both debt and equity, that this is a product that should exist and that we had the right developers on board to build it. So in some cases, we would code GP projects. We would get involved in meetings with lenders, with equity. And so it really got me deep into how the multifamily industry works, specifically how emerging asset classes work and how innovation works its way through the built world. So when we sold Common in 2022 and I transitioned out, I was really thinking about, what do I want to do? And, I had an audience of people who were curious about real estate innovation. This was a time when people were trying to figure out, it was kind of apparent at that time that the venture capital model did not really work for financing innovative brick and mortar concepts. You had all of these, people who were curious about OpCo, PropCo, but they already had a, venture-backed OpCo that had raised $50 million. And that's a really tough position to be starting out if you're trying to build a real estate company or an asset manager. So a lot of people trying to figure this out, and just started writing from the position of an operator, of someone who had done this, but also very much taking a journalistic angle on it and saying, let's do deep dives into individual investment themes and concepts, go into profile the operator, understand what their return targets are, what their buy boxes are. And that expanded broadly into what Thesis Driven is today from a newsletter standpoint, which is broadly covering the future of the built world through an innovative lens. And we think about that kind of in a few big buckets. There's technological innovation, financial innovation, macroeconomic forces, and social and cultural change. And we try to cover kind of each of those things and how they influence the future of real estate, both in terms of what gets built as well as the industry and how the industry works. Over the past year, we've really built out two other businesses alongside that. One, which Paul and I are heavily involved in and run together, is our education business, and that's become actually the largest part of Thesis Driven, where we are teaching real estate topics from a very practical lens. So really for people, some of them are for people who are not really from the industry, but are looking to get up to speed on some of the key concepts. There's another one, which is for people who have real estate experience, but are looking to do their first development project on their own. So we have an intro to development course. And then we have a third, which is our most popular, which is focused on capital raising for real estate, which is something you don't really get taught anywhere else. Like, how do you actually raise capital from family offices, from high net worth individuals, from, because if you're starting out and doing your first real estate deal and raising for an 8-unit project, you're not going out and getting Blackstone's money. So how do you go and talk to the universe of high net worth individuals and family offices? So it's our capital raising course. Paul and I are actually going over to teach that shortly after we get off this recording. So got that on my mind. But yeah, that's a thesis driven universe right now, and we're really excited about kind of how do we, in many ways, make it easier for sponsors, for capital to connect and to maybe bring some of what exists in the tech ecosystem around fostering those relationships into real estate where they haven't historically existed.
Very cool. That's awesome. For what it's worth, Brad, I actually was studying under Tim Draper. I was part of an accelerator program back in 2014, 2015, and
Wow.
we used General Assembly as like the platform through which we were all learning like base level coding, right?
That's awesome.
Yeah, it was very, very cool. I mean, I will say, like I said in the intro, I think Thesis Driven is some of the best content out there, and I'm not just saying that because you guys are on the podcast today. I really think it's awesome. It's long form, it's thoughtful, and it's unique and interesting in a way that so much, especially real estate content, can be really dry sometimes. And one of the things that I think you guys have really nailed is you have this really distinct style and voice to Thesis Driven, which I think is especially interesting given it's largely a guest writer model, right? So you guys are writing a lot of the content yourself, but so much of it is coming from other folks that you guys have in your network. And every letter is like a little deep dive into some type of niche that I feel like is at the same time really unique, but also broadly applicable, right? It's like you don't have to love IoT to enjoy, one of the latest newsletters about IoT. So I really love it. I think it's great. Just wanted to put that out there. One thing I'm really interested in, Brad, that I think you might have been going to is one of the most recent offshoots of Thesis Driven, which is the developer database. Just today, this morning, you guys shot out a newsletter about the developer database, and I was wondering if you could tell us a little bit more about what that is, what your goal for it is, where you think it could take Thesis Driven, and perhaps what some of the use cases would be for end users.
Yeah, totally. So one of the challenges we faced when growing Common is we needed to meet developers, and the kind of developers we wanted to meet who were going to build co-living or micro apartments or some innovative type of real estate were often not your NMHC top 100 largest developers in the country. They were small, innovative, emerging managers, groups that maybe owned 500 units, 1,000 units, 5,000 units, and were looking to do something different, but had a strong enough relationship with their lender, with their equity, where they had the right to experiment a bit. Finding those groups is incredibly challenging. And there are a lot of startups, there are a lot of folks in the capital markets and lenders that are looking to meet emerging managers and developers that aren't your RXRs and Tishman Spires and MAAs and the groups that get a lot of the attention and come to Blueprint and the other big technology conferences. So we built this database. It's entirely handmade. We have about 7,200 development firms in there today, really to help groups that are looking to understand what the development ecosystem looks like and go out there and meet developers. So get in front of developers, understand who they are. So it's not just the developers and what they're building, It's also key executives' contact information, things like that. So we do build it as a prospecting database. Most of the subscribers are, vendors, they're technology companies that are out there selling something. And we look at this just as, yes, it's a cool data product. People enjoy it. But it's also part of how we look at building this ecosystem over time as well. I mentioned doing more to surface what developers are doing, get out there, connect them with capital. And we're not really doing as much of that today, but we're getting into it, and it's something I'm really bullish on for the future. For instance, Paul, you want to talk about the pitch night we did a couple of weeks ago? I think that's a harbinger for things that we'd like to get into in the future with Thesis Driven.
Yeah, totally. We did our first, pitch nights are pretty standard in the tech ecosystem. And to Brad's point, trying to bring some of those best practices from startup world to emerging real estate sponsors and GPs and investors, et cetera. So, we experimented with our first pitch night, which was really taking 12 sponsors, largely from our capital raising and intro to development courses. Some folks who were working on more down the fairway, multifamily projects, to folks who were doing, branded residences in the Caribbean, people coming up with a distributed hotel model that was, akin to a very consolidated short-term rental portfolio in vacation town, some really just innovative, interesting things. And we brought them all together. They had 7 minutes to pitch, and Brad and I moderated, and we had, 200 plus investors come. And then we just very simply said, anyone that wants to, contact or be put in touch with any of these folks, we're happy to do that. No vig, no nothing, just, make introductions, which are, if you're raising money for real estate deals, very hard to do. And we were delighted, I think, by just the turnout, not just the quality of the presentations, not just the number of investors that signed up, but the interest in connecting with people. And, it wasn't just individuals that were looking to write $50,000 checks. We also had some institutional investors that, quote unquote, snuck in, that we more than welcomed, who were, thought it was really interesting to start following some of these groups early. Maybe they weren't, ready for a $100 million check tomorrow, but they saw that as a, kind of a unique channel to access, some of these more earlier stage innovative sponsors that otherwise, both of those two sides of the table would otherwise never have, exposure to one another until, much later down some of these sponsors' journeys. So I think that was, hopefully a seedling of what we're looking to build here, both to, continue to build a network of high net worths, family offices, some of the more innovative private equity real estate firms, and connect them to more of this innovation. And again, maybe not all of those investors or not all of those sponsors are ready for, some of those larger investors today, but it's really, building the foundation for that ecosystem that we think is super exciting.
Yeah, that is very exciting. To me, I almost hesitate to use this word, democratizing, right? But I feel like Thesis Driven at its core is largely about democratizing access to knowledge, right, through the newsletter and the learning platform, and then to information about GPs and LPs through the database. And now, which is huge, I think, is what you guys are talking about with Pitch Night, democratizing access to capital, which is, I feel like, one of the biggest barriers to entry for so many smaller GPs and operators out there, which as students in a master's in real estate development program where we're thinking about what are we doing next? How do we actually do our first next deal? I mean, all three of those things are like perfect for like what we need to learn the business. Again, that's a specific use case, but I think it applies so broadly to like a large swath of different people across the real estate landscape.
Yeah, and I think one of the really interesting things about kind of bifurcating this idea around, the GP LP model and who's really, well, first of all, in the first loss position when it comes to pioneering and investing in development projects and real estate acquisitions, but also where the priorities are. I think within a general partnership, as a sponsor, you're really focused on creating value during the whole period and, finding the right entry point and being innovative and coming up with these unique solutions to how to improve your portfolio and the built environment in general. I think bifurcating again that ownership structure and identifying where the priorities are in each party really allows, well, everyone, vendors included, students who are looking to get into this space and understand what their value proposition is. It allows everyone to be able to really hone in on what they want to do and how they can contribute to this space. And this morning, I know, took a look through Brad's report and going through this developer owner database. I think a few of the main nuggets that you guys share is that this lion's share of operators in the GP developer space are really starting to emerge more in kind of the South Florida market, New York, Dallas. There's a bunch of other, great nuggets of information that I'm sure you're able to access through the development of this platform. Curious if you guys have come across any other, interesting golden nuggets or factoids as you've learned a little bit more about the sponsorship side of the business and bifurcated the split between the capital sourcing aspect and the value creation aspect in the built environment.
Yeah, I think you can look at it a couple of ways. And one is, the markets and the asset classes that have dominated, or, you blur your eyes and look at it, they're still dominant. You still are going to have big Southeastern markets, coastal gateway markets are still going to dominate. The largest asset class by far in the database are people doing ground up multifamily, followed by industrial, followed by, value add multifamily. But I think what's interesting is you look at the other end of the spectrum and asset types that, may not have a lot of GPs chasing after them, but that's sort of where the opportunity is. And it really depends on what lens you're looking at it from. If you're a vendor and you're building a tool that you want to sell into people doing multifamily because that's going to be the, fattest part of the market by far. If you're an investor and you're looking for alpha, you want to find someone who is not doing what everyone else is doing. You want to find someone who is, building industrial outdoor storage, like doing marinas, doing surf parks. And that's, I think, what as people, gets us really excited. And you look at the developers that were at our demo day, many of them companies and individuals that had gone through Thesis Driven's courses that are saying, hey, there's not a lot of attention around destination branded residences, but partly because there's not a lot of attention around destination branded residences, we can generate superior returns there. And as an investor, you just have to get comfortable with something that is maybe a little bit less proven, not even from an operational standpoint, but maybe there's, not a 10-year history of transactions and exit cap rates that have been proven out. So you have to, as an investor, get comfortable with some of that, but that's where the upside is.
Yeah, and I think that's where we, aside from, helping GPs get access to investors, I think we also think it's, partially our role to educate investors, not just educate the market on, some of these trends, but, I think some more of what you'll see from us in the future will be focused a little bit more, tighten the aperture a little bit about, investing into some of these newer models, and what to be cautious of, but also, where the opportunities lie, why alpha exists, how to assess sponsors. I think that's a big reason why family offices and high net worths, in theory, should be the ones that are backing a lot of these, earlier stage sponsors that are doing some really unique things in these emerging asset classes. But there's nowhere to really get that education as an investor either. So there's a lot of educating that needs to be done on that side for people to get comfortable with and be able to properly assess quality of the sponsor. And in many cases, these are opco-propco structures. So there's some operational complexity. And, the entrepreneur is not just building a property company, but also an operating company. So, that adds, even more complexity from an investor standpoint to be able to assess both of those businesses. There's lots of people focused on this, lots of really smart people, but we hope that we can, continue to, provide some more education for that part of the stack as well.
And you guys have both, speaking on this education component, you guys have both pioneered in this space, kind of at the intersection of technology and the built environment, really for your entire careers. This industry has really not been one to reward first movers. How have you been able to reconcile the calculated risks that come with championing innovation in a market that really historically has just been so resistant to change? I know it's it's a broad question.
My simple answer is I haven't calculated it. I mean,
Yeah.
it's been, when I got really interested in, I believed that there was a big trend in, hospitality coming to traditional asset classes a very long time ago, specifically office. And that's why I left a very cush real estate private equity job that was focused on value add office to go pursue something in the prop tech space that supported, bringing more, hospitality services and amenities to these buildings. And, I was a black sheep for a long time. And like the prop tech, even in, the prop tech space was super small. And it's been largely unpopular really until today. I mean, I think we're just seeing, for better or worse, thanks to, the challenges that exist in the capital markets today, and, the rapid growth of some of these large asset managers, people have to lean into innovation to find alpha. And that's becoming clear finally, a decade or more later. It was impossible to calculate then. And, it was kind of something that you just had to believe in and follow your heart in. But that's my 2 cents.
Yeah, I mean, I would say that maybe push back on the premise a little bit. Like, real estate certainly has a reputation for resisting innovation, and there's certainly reasons why that reputation is well earned. But I think it gets built up and becomes scarier than it actually is. One, real estate is incredibly fragmented. So, like, the largest real estate owner in the country, or largest multifamily owner in the country, has about 0.2% market share of the apartment market. That's the largest. And if you're to add up like the entire top 100 owners, it's like 5% maybe. It's some ridiculously small percentage of the entire segment. So it's such a big industry and it's so fragmented that if you're thoughtful about how you're doing your sales and you're going out to market, you can certainly find pockets of groups that are hungry for innovation. I would say the current biggest issue prop tech faces specifically is almost the opposite problem. It's tech fatigue, that a lot of these owners have actually embraced too much technology because everyone's been telling them that, they need to embrace more tech. So they're like, okay. Like here's my, tech-enabled package solution and my pet screening solution and my fraud detection solution and my amenity booking solution. And now we're in a situation today where the average property manager of a multifamily building in the United States has logins to 21 separate systems they need to do their jobs. That is an unsustainable situation. And so you have a lot of resistance whenever, and there's a funny XKCD cartoon where a programmer gets a smart idea. They look out and they say, wow, there's 12 competing standards. We should build one standard to unify all the competing technology standards. And they work for a year and they come out with their new standard. And now there are 13 competing technology standards. And it's kind of like that. I mean, everyone looks at this and says, wow, there's so many different like apps and logins and services serving multifamily. There should be one app or service or login that unifies them all. And like, a year later, now property managers have 22 separate logins to tools to do their job. So if anything, the problem today is technology fatigue. There's too much technology there and it's too fragmented.
Yeah, totally hear that. I live in an apartment in East Cambridge. Wonderful apartment. I have 3 separate apps on my phone for living in this one apartment. It's ridiculous. And that's, like, in my opinion, too many. Not 22, but still, it's ridiculous.
Some might argue it's 3 too many.
Right. There you go. I feel like there's a great point maybe to move into a discussion of broader real estate trends, which I feel like we're already getting to. Like I said at the top, I think there's a lot of places we could go here, but would love to start with a conversation about where you guys think the opportunities are moving forward. You guys started Thesis Driven because tried and true real estate opportunities felt like they were becoming harder and harder to execute. You wanted to highlight innovative concepts. What are those trends that you're seeing? Where do you think in 5 to 10 years the market will go? And what will, for example, multifamily living look like? What will capital markets look like? What will be the next big vertical that people are excited about? Do you have thoughts based on the insider knowledge that you guys have?
There's a lot of ways you could answer that question. I mean, I would say you could look at it from a kind of innovative operating perspective, and you could look at it from a technology perspective. And obviously those two intersect, but they are different. Maybe I'll talk about the technology perspective, and Paul can talk a little bit about the innovative operator side. It has become clear, I think, over the past couple of years that this AI thing is real from an operational standpoint. And and people debate who the winners are going to be in AI, but probably one of the most obvious winners is if you are a kind of smallish business, you are an operating company, you are not trying to build technology, and you are simply embracing the technology that's out there faster than your competitors. Like that is probably the most, people in VCs debate is it going to be the people building the fundamental models that are going to win? Is it going to be, the application service layer companies that are going to win? And that's an ongoing debate. But nobody really debates it. If you are a multifamily operator and you are really thoughtful about AI and automation and you are embracing it faster than your competitors, that you are going to be a winner from what's coming. And so I think getting on that, and there's a lot of different places, almost every point in the operational spectrum, there is a place for AI. One of my favorite articles I did over the past 6 months was called Building the Zero Employee Property Developer. I think it had a different title. It was called The Quest to Automate Real Estate Development. And it was this thought experiment of could you build an end-to-end ground-up real estate development firm with no employees whatsoever, no human involvement? Everything is automated from, site identification, site selection, underwriting, test fits, pricing, bidding, the purchase process, actually constructing the thing. Obviously, you have to subcontract out to actual construction firms that have real humans. But could you kind of do it end to end? There's clearly some gaps, but at least at the first stages, the site selection, evaluation, assessment, you can get a lot further than I think a lot of people realize right now. And I'm actually doing a follow-up to that article next week called Building the Zero Employee Property Manager, which is, can you operate a building with no people? So we're getting a little bit closer there than I think most people expect.
I think my LinkedIn feed was full for about a week after you published that, Brad, with people commenting on that idea. That was, you obviously know how popular it was among your other thesis-driven articles, but I have to say from the outside, that seemed like one of the ones that got the most traction in my socials of anything you guys have written. It was incredibly interesting. Definitely would recommend anybody listening to go back and find that one.
Yeah, it stirred the pot a bit, for sure.
But yeah, and then on the property innovation side, I tend to look at where opportunity lies through the lens of the capital markets. So for something to really grow quickly in the built world, it has, at least historically, has required institutional capital, and institutional capital has very specific buy boxes of what they'll invest in. It takes time, for institutional capital to get comfortable with an asset class. So that's kind of how I need to think about some of these new opportunities is, what can institutional capital invest in, and what is it? So then you have to ask the question, what does institutional capital need? And, they need the ability to deploy capital at scale into something and efficiently, and there needs to be a platform that exists to do that. There has to be some track record. So, but with all of that said, I think there's more and more, as I noted a minute ago, you have these really big asset managers. For those that aren't familiar, there is a massive trend happening of the largest asset managers out there that are there's tons of M&A, tons of consolidation happening. And these things are trading at crazy multiples. Ares is trading at a 70 times multiple right now. So it's very accretive for them to be acquiring smaller asset managers that are trading at 10 times or 20 times. You have that happening. Their cost of capital is going way down. So anyone that's playing in real estate private equity needs to go to the fringes because they're never going to compete with the Ares and the Blackstones for traditional, multifamily, industrial, et cetera. So they are all leaning into, finding niches. It's just, do those niches offer enough scale that they can deploy, enough capital over the next, 5 to 10 years? Where do those exist? There's more and more operationally complex businesses like Brad was talking about. I think operational complexity has become a theme that people are leaning into, that, the harder it is to operate something and the more just roll up your sleeves, granular, exercises that are required to create that yield. If someone's willing to do that, you're you're happy to back them. So you're seeing that in short-term rentals. I think that's going to be the next big institutionalized asset class. I think you're going to see Blackstone owning large portfolios of vacation homes in the next 10 years. You see a lot of experience-driven real estate. Things like my favorite new one, and it's personally because of just personal passion, but surf lagoons are becoming they're everywhere right now. People trying to put together these, it's the equivalent of putting the golf course or, the chairlift into an area, and suddenly all the real estate around it becomes really valuable. These surf lagoons have gone from kind of shitty technology, doesn't really make financial sense, to becoming hugely profitable and beautiful experiences. So I think we'll see, growth around things like that. There's trends like RV parks that are super hot right now because everyone bought RVs during COVID. And people's HOAs don't allow them to park in RV. So now where do we park these things? Is that a long-term trend? I don't know. I think there's arguments over secondary and tertiary markets, being able to come in and layer in some type of operating model for operating smaller towns and then buying up the real estate. There's some really creative folks that are focused on town management and then using that kind of management model to come in and buy up the real estate. I think 3 years ago, that was super popular, at least in theoretical circles, because people were thinking about, everyone's going to leave major cities, everyone's going to work remotely, and they're going to want to work in beautiful places, that are 2 hours from the city. Autonomous cars may make that possible in the next couple of years, so that may change the narrative. But right now, with the return to office thing, those places became less popular than they were 3 years ago. So a lot of moving pieces, but I think leaning into operational complexity and leaning into more human-driven demands will ultimately be what powers institutional investment going forward.
And Paul, now I think it's prudent we discuss this concept. You mentioned people moving and the trend of people moving during COVID, post-COVID, to some of these beautiful places, more remote places, harder to reach places. I think the subject of land is really one that's of much debate right now. Every time Thesis Driven posts a map, I get giddy with excitement. I love anything. If you show me a map, you've got my attention.
We know all maps are population maps, right, Brad?
Yeah,
They are.
Yeah, one post that really had me thinking is one you shared last week on land values in the U.S. And the trend is obviously these small, concentrated pockets of dense populations and inflated land values. But the majority of the country obviously is much lower population and land value. A lot of it is comprised of federal land as well. And we know right now in the last few days, the Department of Interior and HUD have announced jointly that they're going to do a really cohesive venture and analysis and understanding federal land capacity, affordable housing in some of these underinvested and perhaps even tribal communities. I think two unique points you made were the impact of the state policy on land values and the abundance of public land. I would love to hear your take is on best use cases, covered land plays, and really understanding how we as a society can make the most of these communities that are perhaps entrenched in centuries of history of population migration and opportunity.
Yeah, totally. So, just to speak a little bit about the plan to open up federal land for development. I mean, this is not kind of a uniquely Trumpian thing. Past presidents have tried to do this as well. Obama tried to do it. Biden tried to do it. They got kind of tied up in the complexity of it. It's a little harder than it looks. So hopefully Trump will be able to figure it out. It got criticized because a lot of people looked at the map, like the map I posted on LinkedIn of land values, and said, well, all this land is, it's scrub land in the middle of Nevada. It's owned by the Bureau of Land Management. They own something, the federal government owns something like 650 million acres, like 27% of the entire country. So they own a tremendous amount of land. Most of it is effectively useless, other than maybe a grazing lease or a mining license, because it's very far away from anything, has no infrastructure, no water, no power, no roads, no sewer, nothing. So most of it is not really fit for development. But I think too many people, and I'm going to preface a thesis-driven article I just started working on, I think too many people are too focused on that map, the kind of big picture. Because you can't see this on the map, but the federal government actually owns a ton of land in cities as well that is woefully underutilized. So a great example is in New York City, you have an abandoned airport in Brooklyn. It is something like 1,500 acres. It's massive. It's called Floyd Bennett Field. And it is in southeastern Brooklyn. And it is used primarily for illegal drag racing, RC pilots, remote controlled planes. They're really into this this airport as well. But this is not
best use. Yeah.
It's not the highest and best use of this thing, but it's owned by the federal government. It's not controlled by the city. So if they unlocked something like Floyd Bennett Field for housing development, that could add easily tens of thousands of new housing units to New York City. And there's a bunch of little things like this. There's an Army garrison, 182 acres, in a pretty prime part of Brooklyn called Fort Hamilton. Once again, could be a great housing development. Now, it's an active military installation right now, but in an era of, drones and missiles, like, do we really need like the artillery batteries on the heights overlooking the harbor? I don't know. I'm not a military writer. I'm a housing writer. I'm a real estate writer. But it's worth taking a look at something like that. And I think you can't dismiss the potential. The Postal Service owns 2 entire city blocks in Chelsea for a low-rise mail sorting facility. It's in the shadow of Hudson Yards, where studio apartments rent for $5,000 a month. Is a mail sorting facility the highest and best use of the blocks of 9th to 10th Avenue, 28th to 30th Street? Probably not. So I think people are too focused on like the scrubland in Nevada and not on all of the urban sites that the federal government owns and controls that could and probably should be housing.
Well, hey, I think maybe given the time here, we might move to the last portion of the podcast. And Brad, this is a format that you'll be very familiar with from the first season of the Thesis Driven podcast. If you will indulge me, I'd love to do a lightning round here. Get your guys' take on some quick questions that you, Brad, often asks your own guests. So the first one here, and we've kind of been dancing around this a little bit, but if you could change one policy, what would it be at the federal, state, or local level? And perhaps what we'll do here is maybe, Brad, if you want to take one, and then Paul will take the next, and then we'll go back and forth. But I think this would be a lot of fun.
So if I had to pick one housing policy that would have the greatest impact, it would probably be removing parking requirements nationwide. I think that if you had to pick one nationwide that would do the best for our built environment, it would be that one.
Love it.
One book, podcast, or person you're listening to lately that inspired you in either design, business, real estate, sustainability, or the environment. This is for you, Paul.
Brad Hargreaves at Thesis Driven.
Shameless plug.
One that I've been listening to, this is lightning round. Invest Like the Best. It's a podcast that I hadn't listened to much, and they've got a ton of really good, really thoughtful AI stuff on there. And that's been an obsession, is figuring out as an operator how to continue to leverage AI.
Great stuff. Brad, what's the best piece of career advice you've ever been given?
It is never as good as it seems, nor as bad.
Ooh, that's good, especially for some grad students over here.
Lastly, what advice would you give to those listening who might be earlier in their development, consulting, sustainability, or investment careers?
Be curious. I think now is the best time ever to be curious and to keep learning. Learning to be a lifelong learner early is great. And then just general advice is for anything entrepreneurial is do what you say you're going to do when you say you're going to do it.
Great stuff. And a great place to end, perhaps. Paul, Brad, this has been so much fun. I would have loved to have you guys for another hour or two, but alas, we need to let you go. Really grateful for your time. Before we sign off, do you guys have any parting words for the audience? How can they follow you guys or Thesis Driven?
Yeah, so you'd follow me on Twitter or LinkedIn, and we are thesisdriven.com. And if you're interested in our educational offerings, you can go to courses.thesisdriven.com.
Excellent. Well, that's great. Thank you. Thank you again. And thanks to our listeners. Please keep tuning in this season for more interesting conversations with professionals like Brad and Paul. I'm Robby Mulcahy.
I'm Dean Firouzian.
And we'll see you next time here at the MIT Center for Real Estate.
Thanks to our listeners for tuning into another edition of Meet the Visionaries podcast. And please remember to stay tuned for future episodes by subscribing to our podcast or follow us on social media by visiting cre.mit.edu to learn more. Until next time, take care, listeners.